Hello again. This is the US Futures weekly chart analysis for the week ending 14th of October 2022. The first chart is the US Dollar Index Futures. Put the lines in. You can see 2 weeks back, supply was drawn out down here on the very high volume. In response, the market pulled back below the previous bar's closed and tested for supply. In response, price popped up to close as a little up bar for the week. Now this week, prices pushed higher. There was another little test for supply below the previous bar's close this week. And then price pushed higher, but spread has reduced considerably and volume down here was well above average. It was probably the narrowest spread since these two bars here. So that's 5 or 6 weeks ago, but volume was much higher. If you have a look, since June, volumes have steadily increased. And volume this week, down here, was really quite high. Yet, spread was quite narrow, certainly below average. This suggests that supply continues to be drawn out in this market, and it was difficult to push higher. Price may have attempted to push higher, but the supply coming in from above like this was pushing price down, making the headway hard and keeping the spread narrow overall. Now this week there may have been some absorption of that supply, and that may allow price to continue higher again next week. But if that supply continues, if it's ongoing and persistent, you may find price comes back down in response and perhaps tests this 110 line. I expect that early in the week, and this often happens early in the week, in fact most weeks, the market will test for supply. It's a fresh week. That way the market can get some sort of guide or gauge on how much supply is in the market, and that will then play a part in which direction the market moves in response. So look for a little test for supply like this early next week on Monday or Tuesday, and then depending on how much supply is drawn out, the market can then move. This is S&P 500 index futures, and the market has maintained this level next to the most recent lows. Previous lows are back here, so you can see prices drifting lower. The market traded either side of the previous close and ended up closing pretty much in the middle on pretty good volume. The strength in the US dollar doesn't help this market particularly. It's not a strong headwind, but it's a headwind all the same. I'd say this market is drifting lower, reluctantly, but drifting lower. It doesn't really want to go down. There's been a couple of attempts to find support in this market recently, and it could have really sliced lower if it chose to. The opportunity's been there, but it really hasn't. It's tried to hold on to these previous lows back here, and it's reluctantly drifting lower. This is the US Treasury 10-year note futures, which have also been drifting lower. There's a bit of acceleration lower here, but a price tried to hold on here, then further supply was drawn out on this bar, and prices drifted lower this week, pretty much trading the inverse of the US dollar. The US dollar was up on a narrow spread and an increase in volume, and this is down on a narrow spread with below average volume. So I don't think this was so much an acceleration lower as a drift lower, mostly trading the inverse of the US dollar. The next chart is copper price futures. Copper price futures have been very resilient. This market is attempting to absorb the strength in the US dollar. There's almost no doubt the US dollar would have this market trading at the previous lows or even lower, but the market's held on up here, hasn't even tested the previous lows yet down here, and the market's holding on strongly. The US dollar was up this week, so this market really should have been down, trading more like this. But that's not what happened. This market traded slightly higher this week, albeit with a narrow spread and average volume, but it's trading the inverse of the US dollar. It's attempting to absorb the strength in the US dollar and maintain its position at this level. It's done a great job. That's a really strong result. Gold price futures. Gold price futures are attempting to be resilient as well. Prices holding on at these previous lows. The market did move lower in response to the strength in the US dollar, which is expected, but overall the market is trying to hold on. It's not as strong as the copper market was previously. Spread was perhaps a little bit wider this week than it needed to be, but in this market it's always a little bit more volatile because the gold traders, when they see the weakness come in, they bail and look again for a price at some point in the future. So there was some supply drawn out. It wasn't particularly strong. Volume was only about average, but this market has traded lower, perhaps a little lower than it needed to, considering the spread on the US dollar this week. This market does show resilience, but it's not as strong as the copper market. Silver price futures, we talk about volatility. The silver price futures amplifies the volatility in the gold market considerably. There's the lines. Silver price pushed up to this breakdown line, but failed immediately. We have had some buying support come in here. The price pushed up in response, then attempted to accelerate higher here. This week's bar has pushed back to the previous lows. It did close the gap that was in here. It was an inside gap, so it was always likely to close, but it has closed that gap this week and prices pushed back to these lows again on still slightly above average volume. Spread was quite wide this week compared to the previous bars. So a lot of people were getting out of this market as it began pushing lower, and that caused price to start accelerating lower. And it's closed at a logical point, so that's a good response overall. I would expect an attempt now to recover and stabilise after a bit of a violent loss this week. So look for price to hold on around the $18 mark next week. This is light crude price futures. It's been a bit of a strange market recently. Price has made a couple of attempts to stabilise and perhaps accumulate in the past, but price has pushed lower both times in response. There was some buying support come in here 3 weeks ago. The price pushed up to this resistance level, which is the lows of the old trading range, and price wasn't strong enough to push straight through. It's come back this week on average volume, but just note that spread was possibly half of the rise in price. Here's the rise in price. It's risen from here up to the lows of the trading range, and it's come back about half that range, but volume was still average. Buying support has been maintained in this market. It has traded the inverse of the US dollar. It's pulled back. In some respects, it's testing for supply, but it's a very wonky test. Perhaps it was an attempt to test for supply, and more supply was drawn out that was anticipated. But the fact that the spread remains about half of the overall push higher after we've seen the buying support come in suggests that there is buying support in this market, and it's been maintained, and that's kept spread relatively narrow this week in response. Now we'll just have to see how price trades next week. You would expect an early test for supply, something like this, and then a response depending on how much supply is drawn out. Aussie dollar currency futures. have really begun to capitulate now. Price sliced lower. It attempted to find support very briefly around the 65-cent level, which is where I anticipated some support would reside. And there could be still a push higher here, an attempt to recover. But really, this market has failed at the 65 level, and it's heading down into this little narrower zone just below 60 cents. There may be an attempt to recover 65, but I think we're heading down to 60 cents unless the market reverses overall. Price traded the inverse of the US dollar this week and perhaps even amplified it a bit with spread a little bit wider than it really needed to be, considering the spread on the US dollar. The market's being sold down now. It's less stable than it was, and I'm expecting price to come down around the 60 cent and attempt to find support down there. Bitcoin price futures have been maintaining a level down here around the 20,000 for some time now. There's certainly been the opportunity for this market to break down. There's been some very high volumes go through during this period. Remember, this is a weekly chart. And if these were all selling pressure, then this market certainly had the opportunity to break down. I expect this level lasts to about 16,000. If it can't hold on there, the next lower zone is between 12 and 8,000 down here. But price is holding on at this level, and the opportunity's been there for price to break down, and it hasn't done so. So there must be an attempt in the market to support. Now, that's not to say if this market does break below 16,000, I would expect what support has been generated in this zone will be dumped and price will come back to around the 10. But there's an attempt to support the market, and while it can maintain itself above the 16,000, the opportunity is there for price to push higher in the future when the market trading conditions are more favourable for this market. At this point, the market is under pressure with the overall market. It's holding on strongly and it's being resilient and continues to find ongoing support around the 18,000. I think 16,000 is going to be last gasp support. A breakthrough that will likely see a large amount of the buying in this zone dumped, and price will come back to around the 10,000. But while price maintains this level, there is the opportunity at some point in the future for price to continue higher when trading conditions become more favourable. Just quickly back to the US dollar index for a final look. This market is so important to so many of the other markets. Spread narrowed this week after we'd seen supply drawn out 2 weeks prior. The market has tested for supply the last 2 weeks early in the week and then responded higher both times. But this narrow spread on pretty high volume does suggest that supply continues to be drawn out, and that's going to cause some issues. Generally, when that happens in a market, the market will pull back to some degree and attempt to challenge the sellers. If the supply is ongoing, price will come back even more deeply. If the supply is absorbed or removed and there is low volume in response, then the market will generally respond higher. So we'll just have to see what happens early next week and see how much supply is drawn out. You should really expect price to come back a little bit in response next week, and we'll just see what happens following that. Okay, thank you very much. That's my lot for now. Hopefully that was worthwhile watching. Thanks again. See ya.